global standards, island agility, and Caribbean unity. We are the CDFA. Good afternoon. Good afternoon, everybody. I want to thank you once again for joining us for the third of these briefings that we're doing here at the Caribbean Digital Finance Alliance. My name is Dennis Augustine. I'm a member of the executive committee here at the CDFA and the founder of the DX Alliance. And we just want to thank you again for joining us for this webinar about payment facilitators. And we are thrilled to have you with us today for that critical conversation designed to power the regional economy. We want to extend a very special welcome and thank you to our partners at the Caribbean Association of Banks, CAB, and the Caribbean Confederation of Credit Unions, CCCU. We're incredibly proud to have your member institutions join us here today as the CDFA gets going, and I'm sure Annie will tell you a little bit more about the CDFA and our journey, and hopefully the journey that we will take together. So to frame the conversation today, we're going to talk about exactly why the Payfac model, the payment facilitator model, is so vital for our regional growth. I'd like to hand the virtual mic over to our CDFA financial inclusion expert, Annie Bertrand, who's going to speak a little bit. So Annie is a private sector development specialist with over 20 years of global experience who actively supports central banks across the Caribbean in developing financial inclusion strategies.
Welcome, everyone, and I'm happy to welcome you to our third CDFA web dialogue, this time focused on payment facilitators. So over the past 20 years in the Caribbean, I've always wondered why my friend Stephanie could sell her jewelry online through PayPal linked to her Canadian bank account in the blink of an eye, while my other friend, Shamika, spent months just trying to get a meeting with a bank to figure out how to sell online. So as an entrepreneur, she obviously could not provide a letter of employment, and because she had to leave home for personal reasons, she had no proof of address either. Focusing on growing her business is what kept her alive, but getting a merchant account and integrating an online payment gateway into her website became a nightmare. She tried selling on Etsy, only to later realize there was no way to receive the sales revenues in her bank account in Barbados. Given the progress in fintech today, it simply doesn't make sense that some of our greatest Caribbean entrepreneurs, homeowners, and artists are still unable to properly monetize their talent and assets in the global economy. This is one of the reasons a few of us joined forces to establish the CDFA, Caribbean Digital Finance Alliance. We are a private sector association inspired by the success of fintech associations around the world, but with one major difference, our regional focus. Given the size of our Caribbean economies, we need to work together with regional and financial institutions, with regulators as well, to build a digital financial ecosystem that is interoperable, inclusive, and designed for Caribbean realities. So here is our mission statement: to increase usage of accessible digital financial services among Caribbean individuals, MSMEs, governments, and organizations to foster inclusive economic growth, financial integrity, and resilience. The Alliance empowers stakeholders to engage in policy dialogue, share knowledge, and collaborate on strengthening the Caribbean digital economy. We officially received our registration in Barbados this month, and we currently are trying to get our own merchant account so we can finally launch our membership drive soon. In the meantime, I don't know if we have Melissa Boutet with us online, but Julian is also there. We are volunteering our time, skills, and passion for the cause. And so if you have the same to contribute, reach out to either Melissa Boutet or Julian or myself, because we are always looking for extra brains and hands. Just to tell you a little bit about our history so far, our first webinar was powerful, I think, when we learned that Trinidad and Tobago had drafted a bill that would criminalize virtual asset activities. We convened a panel of lawyers, academics, compliance experts, and local fintech operators to discuss the pros and cons and risks of criminalizing virtual assets, while looking at the experience of other countries facing similar challenges. And to be honest, we cannot blame regulators for considering such initial actions because regulating crypto is hard. And when you have the Financial Action Task Force evaluating your country's compliance with international standards, it's scary. The consequences of a bad rating affects the entire country. So from their perspective, banning something when licensing and supervision frameworks are not yet in place may seem like the safest option at the time. Because we understood that, we worked around the clock to ensure that the regulators and policymakers would hear the voices of subject matter experts, and they did. The webinar was oversubscribed with exactly the right people in the room. And a few days later, local fintechs were actually invited to provide comments and revise the bill. So our second webinar was focused on the new FATF financial inclusion guidance published last year. This topic is less sexy, but overcompliance to international standards in the Caribbean financial sector is at the heart of the problem that prevents people, MSMEs, and nonprofit organizations to accept digital payments. So it is one of the reasons why today still 80% of transactions are still conducted in cash in the region, depending on countries. FATF created 40 recommendations that countries are expected to comply with in order to avoid being black or gray listed. The new financial inclusion guidance represents a paradigm shift in the importance of access and usage of digital financial services. Although simplified KYC to support financial inclusion has always been allowed, FATF now realizes that cash transactions are actually preventing financial integrity and effective implementation of its own standards. So going forward, countries and financial institutions are expected to implement the risk-based approach, to simplify KYC requirements where they are low risk of money laundering and terrorist financing. I'll conclude here, given that most Caribbean people, like my friend Shamika, are clearly not involved in trafficking humans or financing terrorism, they should have the same access to digital financial services as my friend Stephanie. So this brings us to the topic of today. What if Shamika had access to a payment facilitator that could manage the compliance requirements for her? Could she then have access to the global economy and sell her crafts? This is what I hope we can hear from our speakers today. And I'll stop here, and Dennis, over to you. Thank you.
Thank you so much, Annie. I appreciate that intro. And as Annie has mentioned, this is the third of our sessions as the CDFA. This is an alliance. An alliance is nothing without allies. And so each of you on this call, you are part of our constituency, whether you are a banker, a regulator, policymaker, a fintech, somebody who just has a vested interest in seeing digital finance throughout the region succeed. We're really desirous of having you join us. So if you would go to Caribbean Digital Finance Alliance.org, you will find there a pre-registration form, and we will be launching our registration drive shortly. So as we get going, I want to give each of our panelists an opportunity to introduce themselves. And so let's just go around the room with our panelists briefly to have them introduce themselves, if you would, folks. So we'll start with Chris Burns from Powertranz. Chris.
Hi, good afternoon, good morning to everybody. As Dennis said, Chris Burns. I am the CEO of Powertranz, formerly known as First Atlantic Commerce, or FAC. We rebranded late last year. We are an e-commerce and point-of-sale payment gateway company. We work pretty much exclusively within the Caribbean and Central America, and we are probably responsible for about 80% of all the e-commerce payments that happen within the Caribbean today. And we work with all manner of merchants, from micro merchants through to large multinational publicly listed companies and governments right across the region. So pleasure to be here. Also original founding member of the CDFA. Looking forward to the session today.
Thank you, Chris. We want to, again, thank you, Chris, for your service at the CDFA, of course, and for all of the work that you've been doing at First Atlantic and now Powertranz. We also have a couple gentlemen from a little company that you might have heard of before, named Mastercard. So Thiago and then Eduardo, if you would introduce yourselves, please.
Thank you, Dennis. First of all, thank you for the invitation. I think this forum is very important, and provoking the topic of discussion is very important for development of the region. So I work at Mastercard. My role, I'm vice president responsible for acceptance across Latin America and the Caribbean. Mainly my role as part of the network is to work alongside direct participants and other members of the network to promote the advance and development of the payment ecosystem across the region. So happy to join this valuable conversation.
Hello, everybody, and thank you very much for these special invitations. My name is Eduardo Marin. I'm representing the Mastercard North LAC, including Mexico, Central America, and the Caribbean. And my role is focused on development across these specific regions, all the acceptance solutions and merchant solutions as well. So our role is be very close to our customer in order to expand the acceptance network in a specific on the Caribbean, for example. We are working with several customer processor acquirers and Payfacs in order to improve the acceptance, the quality of the acceptance, and also bring new innovations into the acceptance ecosystem. Try to imagine the power and expertise Mastercard globally bring in a specific solution for the Caribbean specifically. So thank you very much. This is super important for us to be very close to the Caribbean ecosystem, and it's a pleasure. Thank you.
Thank you very much, Eduardo and Annie, and for all of you online. Unfortunately, we've lost our host due to some power issues in Dominica right now. So we're going to continue moving across the panel, and we're going to ask Alexandria, please, to introduce yourself.
Good morning, everyone. Good afternoon. Alexandria Dean, Manager of Merchant Services at Bank of the Bahamas Limited. I have been in banking for over 17 years. I've been here at Bank of the Bahamas for exactly 10 years. We offer a wide range of merchant services solutions, and that's from e-commerce, QR payments, the regular POS devices, and of course, we have a wide range of Payfacs already on our books as clients.
Thank you very much, Alexandria, and look forward to your input with regards to this topic. A very meaningful discussion that we have today. Let me just introduce myself as well, Julian Gregg. I'm also one of the founding members of the CDFA team, and I'll help manage these discussions going forward along with Annie. Moving on, our final panelist today is Jillian Ferreira. Jillian.
Thank you very much, Julian. Jillian Ferreira, good day to everyone. Joining the webinar from the Bahamas, Bank of the Bahamas Limited, where I currently serve as the Senior Manager of Business Services. I've been in the financial services industry for more than 30 years and involved with technology, systems assurance, project management, and change. And in more recent years, digital transformation efforts within the bank. And I have been directly involved and led large-scale projects, including card issuance, contactless card projects, and strategic and regulatory aligned merchant services expansion into high-integrity risk merchant segments that have opened up here in the Bahamas. And so I'm very happy to be invited today by the CDFA to participate in this very timely and important discussion. Thank you.
Thank you very much, Julian. Actually, I mentioned in my opening remarks that 80% of transactions in the Caribbean are still conducted in cash, but this is definitely not the case in the Bahamas, and it's not random that we have the Bank of the Bahamas with us today. Clearly, they are role models, and we are really happy to have them with us today to share their experience. So let me begin with the first question for Chris from Powertranz. How does the Payfac model fundamentally remove the merchant account bottleneck? Can you please explain to us Given your footprint across 27 countries, are we really infrastructure ready in the Caribbean? So Chris?
Sure. Yeah, thank you for that. So our mission over the last 28 years has been trying to make payments more simple within the region, right? So simple and secure for merchants online to accept credit and branded debit card payments. And to a degree, that has been successful, but there are literally thousands of merchants that are accepting card payments through their websites today, right across the Caribbean. And that's millions of transactions a year. But the model that has been prevalent over the years has been what we call a direct merchant account model. So an individual person or merchant has to go to a bank and apply in their own right for what's called an e-commerce merchant account, which allows them to accept payments online. Now, the Caribbean has a lot of what we call long tail merchants or smaller merchants or micro merchants or SME merchants that also want the ability to be able to accept payments online. And as Annie rightly pointed out in the intro, that it has been difficult for these smaller merchants or sole traders to be able to access those merchant accounts from the traditional acquirer base across the Caribbean. The purpose of a payment facilitator is to simplify that process and to make it faster and give access to a much wider merchant base to be able to accept transactions online. So that purpose of the payment facilitator is to sit in front of the traditional bank and be able to onboard, take applications, provide the technology solutions upfront to merchants that might not have had the ability to access a traditional merchant account directly from a bank. So we have seen large players across the world like Stripe or PayPal provide those services at scale very successfully and very profitably across the world. And now it's really time, I believe, for our region to really take hold of that. And from a technical perspective, the back-end infrastructure is there. So companies like ourselves, like Powertranz, like Visa, Mastercard, Amex, et cetera, the banks have all the technical infrastructure to do it. Now we need to move to the next phase to allow the process and the underwriting and the facility of a payment facility to take charge and help these smaller merchants really come online as quickly as possible.
Great, thanks, Chris. And then I'll move directly to Julian, if she can, from her perspective as the banker, explain how was the Payfac model a strategic missing piece for Bank of the Bahamas, and how did the Bank of Bahamas try to promote the use of Payfac in the region, in the country?
Thank you, Annie. The Bank of the Bahamas, from as early as, I'd say, 2019, 2020, embarked on a very ambitious strategic plan, the beginning of which was to strengthen our foundation and to build, from a risk management perspective, all the areas of the bank to develop the business. As we all know, at the beginning of 2020, the world entered a shutdown phase with COVID-19. We also saw locally in the Bahamas where our regulator, the Central Bank of the Bahamas, also issued licenses to what are called payment service providers. And they issued about 7 licenses at that time. Those entities were in a position to onboard smaller micro merchants and to offer them services and to use our digital currency here in the Bahamas, our Sand Dollar. The bank recognized that as part of its strategic growth, that we needed to engage further to enable these entities to perform and to offer services. And so we went about an effort to do the right thing, to engage with these providers with the payment schemes. And so we have actually, over time, and I'd say the third quarter of 2024, I was able, through a GARS, Global Acquiring Risk Standards effort, was able to grow our merchant services department, make it more risk aligned in order to take on these partners. And so we were able to offer them, and by extension, the smaller merchants that they onboard services for payment, merchant acquiring.
Very well, thank you very much, Gillian. And now if we move to Mastercard, Tiago, can you help us to get a better understanding of this hierarchy? You have the Bank of the Bahamas, who is the sponsor bank, and then you have the network, and then you have the Payfacs. So can you help us to put up some perspective on how to understand this whole world?
Sure, Annie. Thanks for the question. First of all, and I think this will build on the explanation on the hierarchy and how this is structured under the Mastercard network. We do believe that in each market where we have acquirers, sponsor banking, fostering Payfacs, we do see acceptance expanding. We do see financial inclusion. We do see an advance in digitalization and formal economy. So I think that's the first important statement, and I think Mastercard operates under this premise whenever we deploy programs and work towards that direction to incentivize Payfacs. So from a hierarchy perspective, we need to consider that we have a sponsorship and accountability, the two main premises. And you have the participants with their distinct roles, but yet interdependent. At the top, we have Mastercard as the network, and we set the global standards for security, compliance, risk management. And those rules are what ensures trust, governance, compliance, and it's translating the operational rules, the framework where we basically operate in a consistent way across markets and participants. Then we have the second layer, the sponsor bank. I think the example of Bank of Bahamas was very precise. And the sponsor bank or the acquirer is the licensed principal member, basically who maintains a direct relationship with Mastercard. And in the end, holds the ultimate accountability for merchants and Payfacs that they bring within the network. But this responsibility goes onboarding, monitoring, compliance. However, they hold the responsibility, they hold the liability. However, they can delegate operational liability. And that's where the Payfacs come into the play. And the Payfacs, they are the engine for scale and innovation. And they play a critical role connecting to what Chris mentioned on merchant onboarding, providing technology, streamline not only the onboarding, but the payment experience as a whole. So it's very important that they participate within this network, and the acquirers, they delegate this operational aspect of the game. However, always under the acquiring sponsorship oversight. In the end, the acquirer is not delegating the responsibility, but helping merchants to access a streamlined experience within the network. So bottom line, Mastercard sets the rule, provides the infrastructure, the sponsor bank owns the accountability, the risk oversights, and the Payfacs, basically they drive the scale, speed, and innovation at the merchant level.
Okay, so thank you, Tiago. But I understand the idea of the acquiring bank or the sponsor bank outsourcing to a Payfac, the process of onboarding and everything, but that also involves reducing their profitability because now they're sharing most likely the transaction fees. So what is the incentive? Maybe I'll move on to Eduardo. Eduardo, also from Mastercard, can you tell us what is the incentive really for the banks or for Payfacs to actually do this process instead of leaving it to individual merchant account with the bank?
Yes, thank you for the question, Annie. This is very important for us. Actually, we at Mastercard, we saw a huge opportunity in order to unlock the acceptance payment network across the region. So though at the same time, we see some barriers. The traditional acquiring model doesn't have the opportunity to scale from the small merchants on a specific use cases. So we create a specific program in order to bring all these Payfac tech enablers in order to expand and bring some new technology in the ecosystem, okay? So we see the Payfac and tech enablers remove three barriers: friction, cost, and speed. Very important in order to expand the acceptance solutions across the region. So we created a specific program support with some key differentiators that include all the key elements that we need. The first one is Mastercard Engage for Acquirers, okay? We created a program for open doors for all Payfacs and tech enablers in order to register the certification of the solutions and also a potential investment opportunity, and bring all the network, the Mastercard network, to all the Payfacs and tech enablers that we have in this program. Again, Mastercard Engage for Acquirers. I will share with you in a couple of minutes the link in order to see how big is this program and what is the benefit that we are offering in the Caribbean ecosystem. The second program is a Mastercard Accelerator Framework. For any acquirer that has a Mastercard Principal Member License, we have a full program in order to affiliate new Payfacs and tech enablers for free, basically. Why this is important? Because we need to cut all barriers that we have in order to bring new technology in the ecosystem. And then when these two programs are turned on this of benefits, we create an accelerated onboarding and in-person customer service in a specific market. We have a people with that expertise in acceptance in a specific market across the region in order to bring all a specific program. For example, NET program is a franchise program for educate all the acquirers in order to bring Payfacs, or the Payfacs is ready to jump to a specific Mastercard principal member license, for example. Or we create a co-investment program in order to bring and accelerate specific use cases, for example, transit or tourism or a small medium merchants or government solutions, B2B, for example. So again, at the end of the day, it's not only education, partnership, and investment. We include also the Mastercard Center of Inclusive Growth, that is a program, is an institute, the Mastercard Foundation for education and creating value-added services for our Payfac and acquirers. Again, it's a full program that includes 5 components in order to be very close to the market and create programs for expand the acceptance network, improve the quality of acceptance, and introduce innovation in the acceptance space. So this program is available and ready to use. And the solution, the technical solution we are creating in the ecosystem, including, for example, tap on phone deployments, pay by link, embedded commerce, transit, tourism, and all omni-channels opportunity in order to create a new solution for the market. So again, this is a very important, again, 5 components is included in this program: Mastercard Engage for Acquirers, Mastercard Accelerator Framework, all the Mastercard Co-Invest program, and also Mastercard Center for the Inclusive Growth, all in a full package in order to bring the Mastercard power in the ecosystem.
Okay, very good, Eduardo. But how do I get access to all these programs that you're as a fintech? How do I need to first go to my bank?
Yes, for example, if you already have a bank relationship, you have to go to the bank in order to register your Payfac in a specific program, for example, Mastercard Accelerator Framework. But you don't need to go through our bank for Mastercard Engage for Acquirers. You are directly to the Mastercard site and register your Payfac and your project in this site. I will share with you all the link for this program because this is a very easy way to connect with the Mastercard Engage program at this month. It's a very good program. We have a lot of experience, and you can see in that page all the Payfac that already have registered and consolidated a success story with Mastercard.
Very good, very good. Thanks, Eduardo. I want to move to Alexandra who can give us her perspective from the banking side, dealing with the merchants directly also. But before I move on to her, I just wanted to ask, this new program that you're promoting, there's a sort of a waiving, the fees are waived for the banks, and what is the deal really for us in the Caribbean to use that?
Yes, any acquirer that already have a Mastercard principal member license will receive a fee waiver for enrolling a new Payfac in the ecosystem, okay? Try to imagine, for example, we have a ABC bank that have a relationship with a Payfac, and all the enrollment process and the fees will be waived for the next 3 years. So it's super important to connect with your bank if you want to get this benefit, okay?
Up to 10 Payfacs.
Yes, correct. So yes, correct. For if you already doesn't have any relationship with any acquired bank, you can apply for a Mastercard Engage for Acquirers and present your Payfac value proposition with Mastercard in order to open doors and offer your services on any Mastercard principal member license. Okay.
Yeah. Thank you, Alexandria. From your perspective, dealing with those merchants, can you give us a little bit? First of all, are you excited about these fee waivers? Are they going to change your life? Are they going to affect the number of merchants perhaps that eventually onboarded? So, give us a little bit from your perspective on the full payment life cycle day to day, dealing with the sub-merchant onboarding and these master merchants. Your perspective on that?
Okay. Traditional onboarding and banking has historically been slow, a lot of manual and fragmented for the most part. Merchants often deal with multiple forms, repeated document requests, long approval timelines, and limited visibility into the status of their applications or their request. Today's merchants expect that onboarding to feel fast, digital, embedded into their business operations. Payment facilitators and modern fintech platforms have significantly changed the customer's expectations. A frictionless onboarding experience is really about reducing the operational barriers while maintaining compliance, underwriting, and risk controls. What this looks like in practice on a daily basis for us now that we are operating in this space and servicing these kind of customers is digital applications, automated KYC and verification, real-time status tracking, faster underwriting decisions, API-driven integrations, and we've seen this in our collaborations with Powertranz, reduce manual touch points. In many traditional banking environments, onboarding relies heavily on the manual reviews, email exchanges, spreadsheets, physical signatures, and a lot of disconnected systems that naturally increase the turnaround time for customers to get these services. The difference now is that the modern onboarding models, or the Payfacs, shifts and many controls are in automated workflows now instead of a lot of the manual interventions as in traditional banking. The challenge now for financial institutions is balancing the speed, the customer experience, and that's with compliance obligations, fraud controls, AML requirements, and of course, too, the card scheme rules. I do believe that in this industry, and as we move towards embedded onboarding, real-time underwriting, API connectivity, and continuous merchant monitoring, rather than static onboarding reviews conducted only at account opening. Successful onboarding to me and in this space looks like, or the onboarding process should feel simple for merchants, even though there is a significant risk associated with this grouping and with merchants entirely. I think that the operational complexity is happening behind the scenes should not really be seen or affect the customers and the onboarding expectations.
But Alexandria, so what I understand is that you're saying that obviously the onboarding is creates friction for the merchants. So now with the Payfac is the intermediary in the middle that can facilitate the onboarding and do all the compliance directly with the merchants. So for the banks, it saves a lot of time and effort and works, because then it is outsourced to this Payfac. But my question to you is, if you're looking at the AML CFT requirements, the banks, we know that they have very stringent requirements, asking for the letter of employment, asking for proof of address, and all these requirements creates a lot of friction. So with the Payfac, who is focused on onboarding each merchant, can, because of the effort and time they spend on identifying and supporting their merchants, are you saying that they can lower the requirements, AML CFT requirements? It's easier for them to implement the risk-based approach because they're closer to the merchants, so then it opens door to more merchants to be onboarded?
I think it does. Once the Payfacs have, I guess, been successfully onboarded with the bank, and I think we've done a lot of work to make that easy for them. It was a lot of education, and it was new, even though operating in the space, bringing them into alignment with the card associations as well as with what's required from the bank from a risk perspective. I think it's much easier now because then they have an understanding. And of course, there is a liability shift that we would have spoken about earlier on. They are our customer. The Payfac is the actual bank's customer, but then we guide them through what's required in terms of being able to onboard those customers speedily. So it takes away that process, like I said, with the traditional banking. And of course, too, with the technology that is at hand now, they basically make that automated. So you can actually onboard a submerchant sometime within minutes, depending on the operational systems that are in place with the Payfacs. So yes.
Okay, great. Thank you so much. And Chris, from your perspective, dealing with the financial institutions across the region and the Payfac model, can you give us a little bit your perspective on the operational efficiency that this model is creating now?
Sure, absolutely. So really, if you're talking about a micro merchant or a medium-sized merchant, the work at the bank level is relatively the same. If you're onboarding one merchant at a time, and the bank is taking up the same amount of resources to board a smaller merchant as it is to board a medium to large merchant, which, to your point earlier about profitability, is one of the concerns. Naturally, a business is going to look at the more profitable end than the less profitable end. So the purpose of the Payfac is to improve all those efficiencies at scale, to therefore allow this smaller merchant base to be a profitable sector for the banks and the acquirers. So we have Payfacs that we work with in Central America, for example, and with a very large acquirer that had not paid close attention to the micro merchant or the smaller merchant business before. But through that partnership with the Payfac, they have been able to add hundreds of merchants per month to their bank portfolio in working with the Payfac. So the Payfac will employ technology to be able to not cut corners, but to properly onboard at scale, at speed, using technology to be able to evaluate the applications from the micro merchants at scale. And because the banks are then outsourcing the risk to the Payfac, they feel more comfortable with taking that on, because they do have somebody to reach out to, one kind of throat to choke, as it were, in terms of where that liability does reside. So through that, and of course, look, nothing is 100% perfect, and there will always be fraudsters will always find a way. But by better using the technology and the platforms that the Payfacs bring, you can help mitigate that and alleviate that fear, I guess you will. But then also, in order to bring on all these merchants, the bank does not have to staff up to be able to accept all these extra merchants, because the Payfac is taking the heavy load on the front end. And those precious resources on the bank end can be redeployed into doing other sort of important tasks throughout the bank.
So Chris, you're saying essentially that for merchants who wants to have access to an online payment gateway, a merchant account, they may not have to wait 3 months or 4 months to get access to it, and it could be.
Yes, exactly. And we've seen these with our Payfac partners in Central America, for example, there's been a huge speed up and turnaround in terms of the onboarding. So if you think about what we're always talking about, and what we've been really pleased to see Bank of Bahamas do, is that they're creating that Stripe type experience within our region, right? So the reason Stripe is now valued at $160 billion is not because they're deploying technology that nobody else is deploying. They're deploying a speed to market approach that allows them to enable online payment acceptance at a huge scale at a very fast pace.
Very cool, very cool. And now, Julian, from your perspective, leading all kinds of strategic transformation with the card payment networks in the region, can you give us a little bit of your perspective on the hurdles in championing specifically the compliance that we're talking about?
Thank you, Annie. And yes, and so certainly as the acquirer, we do still maintain responsibility for our Payfacs and the sponsored merchants. And so as the bank engaged in this line of business, we needed to make sure that our own, from top to bottom, from our governance, our policies and procedures, our risk acceptance policies, all of our onboarding, underwriting efforts and programs extended to these Payfacs. And what is very key here is there is continuous monitoring and screening. Yeah, the Payfacs do execute a particular agreement with us for them being a payment facilitator and to enable them to actually onboard themselves the sponsored merchants. And so, as Alexandria would have mentioned earlier, they are expected to take on quite a bit of due diligence effort, which we do monitor on an ongoing basis. But as it was new for us here, we really did have to reach out and train and give guidance and explain based on the information that we ourselves were getting from the card associations, as well as our consultants who work in the space that were also recommended by the card associations. And so with that, the hurdle, the Payfacs didn't really appreciate the level of review that we needed to put them through. We had to examine their own governance and policies, their procedures, their organizational charts, their policies around settlement of transactions once they come through us. They have a level of responsibility there as well. And so a number of them could not understand why they were being put through the ringer, essentially. But we needed to make sure that they themselves had the controls and the considerations in place for taking on the sponsored merchants. And so with all of these things in place, it makes it easier for them to then operate. I will say that with working with Powertranz, we were able to leverage their partnerships for monitoring and control. And so with the use of AI and their partner count, we're able to, in an automated way, control and monitor transactions in real time. And so that effort doesn't lie in a manual space at all. And so we rely very heavily on those advancements to make sure that we can understand what's happening in the network and to be able to maintain our good working relationships with the associations.
Because I suspect that the reason why you need to have all these checks and balances and controls in place is that you don't want to have too many cashbacks and you don't want to have frauds and all those kinds of things. And that's why you want your Payfac to make sure the Payfac has in place the right checks and balances. But I suspect that Mastercard also has some guardrails that they can provide to the sponsored bank to help identify red flags and potential issues. Tiago, if we can go over to you, we'd like to hear your perspective on that.
Sure. So from the Mastercard perspective, I think it's important to balance when we deal with Payfacs two objectives. The one is how we enable scalability solutions in the acceptance territory, but also how we preserve the reliability and the financial responsibility of our network. If you look to APMs in many regions where they scale very fast, where they bring gap to the ecosystems is on the trust, on bringing fraud to the network. So I think the guardrails are very important from an operational level. May generate more work, more monitoring, but in the end, it's very important that we maintain the network as clean as possible. So we have on guardrails rules on registration, on underwriting framework, all the merchant identity, activity monitoring that we need to comply, that participant members need to ensure Payfacs merchants comply with that information. On the liability allocation, chargeback, fraud, losses, we have thresholds that in the end maintain fraud in levels that are accepted. But if those thresholds are met, are reached, we have a framework to identify that and work with the principal member to remediate eventual violations of the network. So the constant monitoring, eventually audit processing on merchant level, on the Payfac level can trigger from Mastercard. So everything risk-based transactions, volume controls, limited, and also frameworks to deal with high-risk merchant categories. So I think that is very important to, on the Mastercard level, that we comply with merchant information, so high-risk categories are identified properly.
Okay.
I think those are the main guardrails.
I look at the time. Our host is not here because there's no electricity in Dominica at the moment. So I'm going to use this opportunity of me facilitating the discussion to go over a little bit. So I have 2 more questions, but then I'd like to have times, if it's okay with you, to stay on a little bit longer, because I have 2 more questions, and then I want to ask the audience to, and Julian also to help me to take a few questions from the audience. So to my last 2 questions. The first one is just to make it more concrete. I know that we're trying to, I guess I wanted to know if a Payfac facilitator could be potentially used in the Caribbean more pragmatically, like, for example, let's say an association of a cooperative of farmers. Could a cooperative of farmers being able to monitor their own farmers to have access to online payment and facilitate the process themselves? Or is it too low? I'm exaggerating a little bit because the farmers are not necessarily properly registered businesses. So I'd like your perspective and pragmatically, if that is the case, a use case that could eventually be considered as a Payfac, and also if not, or in addition to, let's say in the tourism sector, where I worked also a lot in the Caribbean, where we have community tourism organizations that offer experiences, guiding tours and all these things. So could a tourism association again be the payment facilitator for all these community tourism organizations and facilitate the online payment for them? Are these kind of use cases that could be relevant in the Caribbean?
The question is for anyone. Okay, I will take. Okay.
No, go ahead, Eduardo.
Yes. Actually, this is a very good question because we already have a very good experience in the farming sector and trade and tourism. And it's not only a technology conversation. We create a new payment experience adapting in a specific needs that this specific segment has. Let me give an example. We create a program for the cafeteros, the coffee trade program that includes several local organizations for the farmers. So we create a specific technical solutions in order to identify the inventory and also connect this inventory using an app with a smartphone and try to connect with a tap on phone solutions in order to acceptance payment in advance of pay-as-you-go, and also connecting all these funds with a specific bank that consolidate all this information and bring via the same smartphone all the settlements and all the transactions in order to apply for a credit bank in order to expand more the business for the farmers. So again, we have a very good experience. Actually, if anyone in the call wanna deep dive on this, will be insightful because we create with the Mastercard Center for the Inclusive Growth and a specific program for the farmers, for the tradesmen, all in a specific service, tourist services and more.
Very good, Eduardo. So actually,
again, all for us is music.
But you touched base on my last question actually was more related to omni-channels, because Payfac Facilitators is not just about merchant onboarding, but I suspect that Payfacs can also facilitate a lot of other capabilities, technologies that can be used. For example, WhatsApp payments.
Yes.
MSMEs don't have a website, don't want to take online payments, but they all operate using WhatsApp buttons and things like that. And Chris, I don't know if you have anything to add on this. Maybe I'll close here before I actually open up to questions from the audience. But maybe before we go to the audience, if you have anything to add on this or on the particular challenges that we need to address in the Caribbean. Anyone, the speakers. And then Julian, if you can open up questions.
Sure, just a quick one for the banks on the call. I think what's important to realize that Payfacs offer the immediate opportunity in terms of accepting payments, right? So there's that. But it also is an opportunity to bring new customers into the banking ecosystem, right? So yes, we're going to come to you for payments right now, but this is an opportunity to engage with individuals, sole traders, small companies, and bring them into the bank to talking about a whole manner of bank products and services, and is a foot in the door for financial inclusion right across the board, not just for payments.
Very well said. Thank you very much. That's my favorite part, Chris.
Annie, I just want to share just one quick takeaway. I do believe that this is a great opportunity and this can bloom into something much bigger. But I do think that all processors, banks, regulators, card schemes, and even the Payfac clients, everyone needs to be aligned. There should really be an aligned framework. And each country, even us, we're in the space, but I think there's a lot of more work that can be done on all levels, but all parties should be aligned to make this more streamlined. And that goes as far as if there's anything new, any changes from the card brands, everybody should be in the loop and understand what those changes are on one page. Yeah, that's my take.
Very good, Alexandria, but that's assuming that we have many Alexandria across the banks in the region that are kind and open to share ideas and collaborate. But hopefully this is happening. So thank you so much, Alexandria. Gillian, any other final thoughts?
Final thoughts. Certainly in the next few years, we're looking at this transition from cash to digital acceptance. And so it behooves us as a group, as leaders in this space, to educate and make our participants in this space more aware of how they can actually grow and develop in this area. We're going to see this digitization of payments be a more normal way of operating. And we're happy to inform or share our experience and our understanding with persons, and also recognize that this is really a wonderful way that we can collaboratively work among ourselves, banks, acquirers, the Payfacs, the technology partners, to bring these services to participants in e-commerce in this space. We're certainly going to see it bloom, as Alexandria says, and now is the time to get on board. Yes.
Very good. Thank you so much, Lilian. This is very inspiring. And from Mastercard's perspective, any final thoughts, Tiago? You wanted to share something?
Yes. Just before sharing the vision, very pragmatic way on one program that Eduardo mentioned, the Mastercard Engage. Not only Payfacs can register, but also you have a set of partners delivering solutions on merchant onboarding, on risk management, on WhatsApp, conversational commerce. So there is technology, service providers that can help streamline this experience. So feel free to join and to request a meeting from the Mastercard Engage team. So very quickly, we believe that we are in a path where we have today, it's clear in the Caribbean, but it's basically across Latin America. We still have an informal economy that we have the tools and we have the players to move from a visible economy. It's not only be part of the financial ecosystem, but also be visible in a way that you can have access to credit, to tools, and to the means to deliver growth. So I do believe on the collaboration, and I do believe on technology as playing an important role for reaching SMEs, not only accept payments, but digitalize their identity in a way that they can really be part of the digital economy. That's what we believe, and that's where we are working.
You mentioned digitalized identity. Yoo-hoo! That is something we would love all to see happen, but I think we have a little bit more work to do to get there. But anyhow, I would like to ask Julian, are there any pressing questions from the audience before we close officially, just to...
Sure, Annie, and thank you all. Thanks to the engaged panel and, of course, the engaged audience as well. Just to let everybody know, again, we are short on time, so anyone who does have to duck out, we will have a replay available to you. Please reach out to us and connect on LinkedIn, or you can also visit our website at caribbeandigitalfinance.org. Okay, so any of your partners or any of business connections, you can also get them involved in this discussion. From the chat and just looking through, we had a question out of Barbados from Rafael with regards to the process of actually becoming a Payfac. I believe that Chris just responded to that. Again, I would say generally across the region, please reach out if you have existing relationships. You heard from Eduardo and Thiago with regards to the programs that are available from Mastercard. You can look in the chat as well for those links, or go and have a discussion directly with your bank. Moving down, we had also a question with regards to Payfacs supporting digital asset technologies. Also, Powertranz does at the present time support stablecoins, so please feel free to reach out to them as well. Anyone that definitely was important here was the credit unions. Yeah, so there was a question with regards to raised by Melissa with regards to, can a credit union become a Payfac or partner with one to facilitate the payments for sole traders in their membership? So anyone who wants to take that?
Yes, very good, very good. We do collaborate.
I will take the related to the credit unions. Yes, the answer is yes. The three key elements that we need to consider in order to become a Payfac is, the first one is all the local regulations in terms of the acceptance payments services will be fully compliant. Okay. The second one is creating an infrastructure, technical infrastructure, in order to be in compliance with all the Mastercard and the payment network standards. And the third is creating a new scheme providing some key differentiators. So for us, it's super important at Mastercard to understand the business case and all the infrastructure in order to bring all the Mastercard education program for including a new Payfac in the payment ecosystem. Okay, so the answer is yes, but we need to cover in a specific process, and this is why Mastercard Engage provide all the step-by-step in order to bring a new project, a new Payfac, a new services into the Mastercard network.
The credit unions can have an acquiring license directly with Mastercard, or they can do it indirectly through the acquisitions of the financial institutions.
Yes, correct.
So it's possible. It's just that they have to follow through the process.
Yes, correct. The first step, as we see very quickly, Annie, the normal, the typical situation is bring all these new capabilities using a partner. For example, we have a Powertranz as a big partner for us in order to include all these new use cases in the payment ecosystem, and then they create their own technical capabilities and bring as a new acquirer, a new Payfac in the market. Okay.
Very good, very good. I think we're close to the end, Julian, but just to say that thank you so much for all the speakers for sharing your thoughts and expertise. I think what I take out of it is that we do have the technology, we do have the partners, we do have the financial institutions that are willing to make the change, that are willing to support the digital transformation in our region and enable our MSMEs to monetize their talent. So that is, thank you so much. That is inspiring. And on Julian or anybody else, if there's nothing else, then I will say thank you to all.
Thank you very much for this opportunity.
Thank you.
Thank you.
Thanks, everybody.
Thank you very much.
Global standards, island agility, and Caribbean unity. We are the CDFA.